It was a good week for technology. The NASDAQ leading the major indices this past week. Google and Facebook soared to new highs. But not everybody's riding that tech wave. Twitter stock is now a $15 stock. Snap, after that huge debut, fell again on Friday, trading below the $20 a share level. Sam Stovall and Bob Doll back with me this week, looking at what happened. And Bob, when you look at technology, is that where you want to be? Because that's the growth story.
Yes.
You said financials, though.
We like financials, healthcare, and technology. Why technology? Strong balance sheets, amazing free cash flow. They are the biggest beneficiaries of repatriation when we get that in the tax reform bill. So we like tech. Yeah,
I know, but the valuations are being talked about right now because they had such a great performance in the last couple of weeks.
They have run very nicely, but their earnings, back to what we talked about in the earlier segment, earnings are pretty good, including for technology. And of course, technology comes in lots of different stripes. Some are very expensive with business models that you can say, I don't even understand. But you've got lots of companies selling at much more. Apple, even after it's run, is not expensive. Microsoft and what they're doing in the cloud is good business. If you want a down and outer that's just begun to perk up, Cisco Systems is there. VMware is doing well. So you can find lots of good tech names.
Yeah, and I bet Cisco is going to be a big beneficiary as we see businesses loosen their belts.
You would think so. Capital spending
start to put money to work. But it's hard to decipher, Sam, when you have a Twitter where it is and a Snap where it is. A lot of people predicted that would be a blow up, and that's what we've seen for Snap. How do you know which one?
Right. Well, and people are questioning, are we back to a tech bubble? Because they're looking at these new era technology companies. If you look, however, to the S&P 500 technology sector, a lot of them are still filled with those legacy names that Bob just mentioned. In terms of earnings growth, the S&P Capital IQ is looking for about a 10.4% gain in earnings in 2017. And tech is right there, maybe a little bit less, 10.3, 10.2. And as a result, their PE, about the mid-17, is on par with the S&P 500, so trading at a relative discount to its longer-term history. So really the question is tech in a bubble? Well, that depends. Depends on which tech stocks you're talking about.
You know, Snap obviously had a very good IPO. There was a lot of excitement on the floor of the New York Stock Exchange. You felt like you were back to the Facebook days. But IPOs have not been strong. What's your take on IPOs right now? And what does that tell us about where we are in this market cycle, Sam?
Well, I think because IPOs really haven't had as many of them as we've seen during the latter phase of prior bull markets, I think it sort of indicates where is the appetite for it. And yes, I think a lot of investors are looking to some of these IPOs more as trading opportunities. Let's just get in early, ride the wave up, and then let's make some money by shorting at the same time. So I think it's much more of a trader mentality. A lot of the retail is still on the sidelines, a majority of them in cash.
I don't understand that. Maybe you can explain it to me, Bob, because companies normally want to go public when the market is hot. We just hit Dow 21,000. The market is hot, and yet people are not going public. Is it because of the regulatory environment?
The uncertainty related to that, the fear of can I really get it done? Part of the reason I think we're not at the end of the bull market is we don't have the euphoria that you're looking for. There are a paucity of IPOs. The ones that have come have been mediocre in performance. At the end of a bull market, there'll be, one every couple of days, and they'll, go to premiums, and we're not there, Maria.
All right. We are waiting for this moment when we actually see the activity and those animal spirits. You do see animal spirits, though, out there.
Definitely animal spirits have shown up in terms of expectations. Consumer confidence moved up, business confidence, CEO confidence. But I come back to that's because the economy has done better and people expect pro-business tax cuts. We got to get them.
It's all about the policy coming out of Washington.
Yes, it is.
All right, we'll be watching. Bob Doll.